Whoa, okay, so for everyone who's holding Afria in their portfolio, you probably woke up this morning, looked at your brokerage account, and saw just how badly this stock was slaughtered in the market today. And this is actually upon release of their Q1 2021 earnings reports, which was this morning. So you would think that with such drastic price movements, the earnings must have been absolutely catastrophic. Spoiler alert, there was a slight drop in overall revenues quarter over quarter for Afria, and net income figures were slightly negative also. So this is pretty much what triggered the massive sell-off for Afria stock today. And so in today's video, we're actually going to be diving into all the figures and getting to the bottom of what really is going on here. So if you enjoy this video, make sure to smash the like button. It really helps the channel out. Hey, what's going on everyone? It's Griffin here, and I hope you're all having a great day as always. If you're new here, then welcome. On this channel, we speak about all things investing, from stock market news, stock analysis, real estate, and so much more. So if you're looking to expand your knowledge and growing your wealth over time through investing, then make sure to subscribe to the channel and hit the bell button so that you're notified whenever I release new content. Alright, so the topic of today's video here is sort of bittersweet, but trust me, there is significantly more sweet in the big picture for Afria. Afria, which is a Canadian-based cannabis producing company that I'm personally invested in and have spoken about on the channel before, has just released their quarterly earnings for the 3 months ended August 31st, 2020, being their Q1 2021 earnings. And by the way, the reason why it's Q1 2021 instead of Q3 2020 for this period is just as a result of the way that their fiscal year is structured, so no, you're not watching a video in the future. Now, as a result of their earnings figures being released this morning, this is sort of a time-sensitive video where I wanted to quickly go over all the information that was released related to their financial highlights and key metrics, as well as their business operation highlights, to give you my overall perspective on what's going on with Afria and how I see the company moving forward. Before we dig into all the data though, super quickly here, don't forget that if you're looking to open up your own brokerage account with an easy to use and interactive platform that is completely commission free, then make sure to check out the link down in the description to open up a Wealthsimple trade account. And when you deposit $100, you'll get $10 completely free. Okay, so since I've never actually done a full standalone video on Afria, let's actually quickly go through what Afria does as a company in case you aren't 100% sure. So Afria is a Canadian-based cannabis company that was founded in 2013 and is headquartered in Leamington, Ontario. Their overall goal is to set the standard for producing low-cost, high-quality cannabis in large volumes in the most natural growing conditions possible. Their main market right now is definitely the Canadian market, but they are making strategic partnerships with companies across Europe to further expand their reach of operations. Their current chief executive officer is Irwin D. Simon, who's a businessman who founded the Hain Celestial Group, which is a multi-billion-dollar leading organic and natural product company. In addition to this, their chief operating officer is Jim Myers, who also came over from Hain Celestial. So we're seeing here that the executive team obviously has a lot of experience in growing this type of wellness and drug company, which definitely instills confidence as an investor. The company also has partnerships in place with Shoppers Drug Mart for rolling out medical cannabis across Canada, which is a great point of sale in addition to having their products available in dispensaries. In terms of international business, Afria also has a foothold in the European market through its wholly owned German subsidiary CC Pharma GmbH, which is a leading distributor of pharmaceutical products to more than 13,000 pharmacies across Germany. This is definitely major for their European distribution chain. Now, based on all the information and growth trends that we covered in the Canadian cannabis industry comparison video, Afria was the only Canadian cannabis company that I personally recommended as being a buy, and it happens to also be the only cannabis company that I hold in my portfolio. In fact, this here is my relatively small position in Afria Cannabis, and the overall average price point was $5.14 as a result of multiple different entry points. I initially got in on the stock at around $3.50 per share at the beginning of the summer, and then I slowly increased my position by dollar cost averaging up to around the $5.30 range. However, I haven't made another purchase here since around the beginning of June. However, this correction in market price might actually become a buying opportunity for me regarding Afria, so I'll let you know what my final thoughts are at the end of today's video. Alright, so obviously pretty much the entire stock market is down today, but Afria really takes the cake here in terms of significant losses. The last time I checked, it was around negative 20% for the day, and this in my portfolio is by far the worst position right now in terms of one-day trends. I'll be honest here, I was expecting revenues to be slightly higher than last quarter. However, the fact that this was during summer months where people were significantly more out and about than during the earlier months in the year during lockdown, this isn't completely out of left field, and I expect that Q4 numbers are going to drastically increase, but we'll definitely have to see. Let's now dive into the information that we were all anticipating, first taking a look at the operating highlights, followed with the key financial highlights. First off, CEO Erwin D. Simon accompanied the earnings release with the following statements. Our strong first quarter highlights reflect the continued robust growth and development of Afria's adult use cannabis brands in Canada. By the way here, if you aren't aware, Afria owns multiple subsidiary brands such as Afria itself, Broken Coast Cannabis, Riff, Soleil, Good Supply, and many others, so this is what he means by their overall brands. Subsequently, he has also stated the following. We are consistently taking a diversified approach to our innovation, strategic partnerships, global expansion, and corporate citizenship to fuel sustainable long-term growth. We believe that the strength of our balance sheet and cash position, combined with our consistent focus on our highest returning priorities, will generate sustainable long-term value for all stakeholders. And look, based on my research about this company, I would absolutely tend to agree with these statements. Afria remains the only Canadian cannabis company that instills enough trust for me at least to warrant an investment. Regardless of this quarter's earnings, their sales are increasing year over year, and they're also focusing on increased partnerships both in Europe as well as in Canada, and their main goal always remains to really increase their overall sales of cannabis itself, which ultimately is the main goal here for a cannabis company and is going to provide them with long-term success and gain increased market share in the industry. Back to the operating highlights though, we're first seeing a record gross revenue for adult use cannabis of $69.6 million in the first quarter, which is an increase of 23% from the prior quarter and the sixth consecutive quarter of growth. So again, let's reiterate that even though total revenue did not go up for the quarter, which is comprised of cannabis sales and distribution revenue, we're still seeing an increase in their main product sales, which is adult use cannabis. This to me is extremely positive news. Building off of this figure, this represents a 103% increase in net cannabis sales since same quarter only 1 year prior, further proving my point that their main product is increasing in sales despite total revenues slightly declining. Speaking of total revenues, net revenue for Q1 2020 was $145.7 million, which is down that 4% since Q4 2020, which is the previous quarter, let's remember, and this is solely due to the lower distribution revenue driven by the pandemic, mostly in their European distribution operations. It's important to understand the distinction between Afria's two main income sources. First and foremost, they have their cannabis product sales, which is the most important as the company expands because this is really their bread and butter as well, a cannabis company. With that said, they also generate revenue from their distribution business, which is literally what it sounds like, being distribution of goods. Now, obviously, it's not fun to see a growth company post total revenues being 4% below the previous quarter, but had distribution revenue been at par with the last quarter and considering the significant cannabis sales increase, this would have been their best quarter yet, and regardless, it's the cannabis sales that we really want to see increasing for future success and profitability, which we are in fact seeing. In addition to this, another positive element is the cost of production of these cannabis products, being that these are plants that are being grown and then converted into usable products and smokable flower. Over time, it's always positive to see a company's relative cost of revenues decreasing because it means that they are streamlining their production process and increasing gross margins. In the case of Afria here, we're seeing that as of the most recently reported quarter, the cash cost to produce dried cannabis per gram was 87 cents per gram, representing a decrease of 1% from the prior quarter, which I know isn't anything major, but is still a decrease, and over millions of grams sold per quarter, this definitely makes a difference, especially since this is the fourth consecutive quarter where we're seeing a decrease in production cost. So up to this point, things seem pretty positive in that cannabis sales are up and their cost to produce the cannabis is down, which is what we want to see. I'll skip through the EBITDA highlights to streamline this video, but overall figures have increased by a minimum of 10%, which again is great. Finally, for the operating highlights, Afria filed a prospectus supplement for 100 million USD, which the company plans to use for further acquisitions, and their subsidiary brands have launched new product lines, with an entirely new brand altogether being formed called Bingo, which will sell economy-priced, large format bags of cannabis, which everyone obviously needs. Afria also entered into a strategic supply agreement with Canndoc, which is one of Israel's largest and most established medical cannabis producers, further expanding Afria's international reach, which is great. Alright, so with all the business highlights for the quarter now out of the way, let's take a look at their income statement and balance sheet to see if we can pinpoint anything else that would be relevant to our overall analysis here. First off, in the income statement, as mentioned, revenues for the quarter were 145.689 million, and I want to bring your attention to their gross profit. For the 3 months ended August 31st, 2020, Afria's gross profit was 75.279 million, representing a gross profit margin of 51.67%. Now, in contrast to this, gross profit margin for the previous quarter was 31.1%, and then for the same quarter last year was 36.01%. So again, this showcases that while Afria's revenues may have been down slightly for the quarter, their gross profit margin, which takes into account the actual production costs associated with their cannabis and other products, have decreased substantially on a relative basis. Another point I want to bring your attention to is the operating expense category, where total operating expenses were $54.540 million in the quarter. Operating expenses include general and administration, share-based compensation, marketing, and basically all the other costs to run the operations of the business that aren't related to the production costs of the products. For the quarter, their operating income, meaning the income that was left over after everything is paid for from a production and operating standpoint, was $20.739 million, which translates over to an operating margin of 14.23%, which isn't all that bad for a growth company of this size that is still very much expanding their product reach and establishing themselves. Now, in contrast to this, in the last quarter, being Q4 2020 for Afria, their operating margin was in fact negative, since they posted an operating loss of 3.371 million. And a year prior, their operating margin was only 3.1%. So from an operating margin perspective, this past quarter was very good for the company. The point I'm trying to make here is that although things may seem bleak on the surface here when you're just looking at the one-day movement of the stock and then also the headlines associated with the earnings being released, well, things look somewhat unsettling for Afria. However, when you look below the surface, well, the company is actually performing very well and continues doing so year over year and quarter over quarter, in my opinion. And even at that, the reason why they posted a net loss of 5.095 million, even though their operating income was positive by a healthy amount, is as a result of financing expenses and non-operating expenses of $17.323 million. And if we scroll down to point 24 in this earnings release, we get more context about what this non-operating expense even is, and that was a $20.25 million foreign exchange loss, which is pretty ridiculous if you ask me, but has no impact on the company's actual operations and growth moving forward. In fact, this net income loss is even way up from last quarter, where they posted a net loss of roughly $98 million. So there you go. This is why Afria posted a net loss for the quarter, and in the bigger picture, this really shouldn't have any negative impact on the company's growth moving forward. In fact, all the information that we just looked at in this video really showcases the opposite, in that this seems to be a very well-managed company that is continuously focusing on increasing their cannabis distribution and revenue while lowering the overall cost to produce this cannabis, all of which is going to be very important for long-term growth and success of the company. Let's now quickly take a look at the company's balance sheet, because who knows, maybe something alarming is going to surface here that we haven't seen in the previous business and financial highlights. Total assets are down $9 million since the previous quarter, with this variance stemming from a decrease in current assets, mainly from cash and cash equivalents. With that said though, Afria has always proven to maintain a focus on bolstering their assets year over year, and from one quarter to the next here, this slight decrease in total assets does not worry me at all. $400 million in cash is still tremendous, and this places their total current assets at $891.5 $526 million and a current ratio of 5.37 due to their low relative liabilities. This is absolutely fantastic and maintains my bullish viewpoint on the company. In fact, they even have more current assets than total assets combined, so again, great balance sheet here for Afria. Alright, so with everything that we just covered here, what are my final thoughts at this point considering this extremely red day for Afria? First off, the stock was pumped up to around $8 per share yesterday, up from $6 per share roughly only a week back, which honestly isn't really all that surprising. The stock's overall movements in today's trading day do seem quite drastic and negative at almost 20% shaved off in market value in only one single day, but realistically this is mostly a dump after the stock being pumped in the first place. If you're actually an investor rather than being a speculative trader here, well, today's price movements for Afria might be difficult in the short term, but big picture this really means nothing for the company moving forward, and if you're bullish on the company's operations and growth long term, such as myself, well, these earnings were really fantastic and really give me confidence in where this company's going moving forward. And let's remember here what I said in the previous Canadian cannabis industry comparison video, where I had mentioned that cannabis as a whole and an industry is still very much in its infancy stage, let alone each individual company. Each one of these companies is still very much solidifying their brands as well as developing their operations and distribution chain in an industry that still has yet to mature and become fully accepted and adopted by a much larger audience. Out of all the Canadian cannabis companies, Afria is still very much the company that I'm most bullish on and will maintain and continue bolstering my position on moving forward, because I can see the stock being a $15 to $20 stock in the coming couple of years as this company continues to expand their reach and overall sales. But what are your thoughts on Afria's extremely rough trading day? Are you going to be bolstering your position, waiting a little bit? Did I miss something actually that is going to be having an impact on the company moving forward? Make sure to let me know it down in the comments, and if you enjoyed this video, make sure to drop a like. It really helps the channel out. And if you are interested in learning more about stock market investing in general, then make sure to subscribe to the channel and hit the bell button so that you're notified whenever I release new content around investing or company analysis. So on that note, thanks a lot for watching today's quick video on Afria Cannabis's earnings announcement. I really hope you enjoyed it, and I'll see you in the next one.